Chapter 6 Merchandising Company Accounting for Purchases Continued. You will note that your trial balance as of December of last year shows a $503.91 opening balance equity. If you did not arrive at this amount, then go back and determine whether you have entered all of the account balances. Once you have, then you're ready to move on. This opening balance equity amount will clear once you complete problems 6-3 and 6-4. So 6-3 is entering and setting up subsidiary ledgers for your customers. So using your customer balance summary, do you want it to go to customer and double click your customer center, and under new customer in job, click a new customer. We will start by setting up Farmers Insurance as our first customer. So Farmers Insurance has an opening balance or beginning balance of $4,600, and this is dated January 1st of last year. So once you set up a beginning balance for this customer, it will show in the accounts receivable as part of your subsidiary ledger of customers account. So 4,600, say OK and do the second one. The second customer is Prudential Insurance, and Prudential Insurance has also a beginning balance of $12,875 as of January 1st of last year. So that's going to be the beginning balance for Prudential Insurance, $12,875. And finally, you have another new customer, and that is Rolly Perez. And this represents the NSF check that this customer had gave you and was returned by the bank as non-sufficient fund. The beginning balance is $974.36 as of January 1st of last year. So if you look at your trial balance and close off of this screen, you could see your trial balance now having the accounts receivable total of $18,449.36. That same amount is showing under uncategorized income. So we wanted to clear that uncategorized income with a journal entry. So make journal entry, and you wanted to debit this journal entry with a debit to the uncategorized income account, and that is for the total of 18,000. So look for the uncategorized income under your income category, and that is for $18,449.36. And on the memo, you can write any description to say to clear uncategorized income account. So any description or memo would be sufficient to describe the transaction you just did. And then on the next row, your credit is to the opening balance equity. So look for your opening balance equity, and that will be for the same amount of $18,449.36. So save this, and you can look at your trial balance now. Uncategorized income is 0, accounts receivable is correct, and so we still need to enter in the subsidiary ledgers of the vendors now, or the creditors. So to do that, you wanted to follow 6-4. You wanted to go to your vendors and then your vendor center and start entering the vendors beginning balances. So the first one is Las Vegas Medical Supplies, and it has a balance of $1,980.45 as of January 1st of last year. So then go to the next vendor, which is Nevada Medical Supplies. And this vendor has a balance of 3,250, and as of this January 1st of last year. Moving along to the next vendor, Office Depot, has a balance of 7,490, and this is as of January 1st of last year. Click OK. And finally, we have another vendor, Office Max, that is having a balance of $5,225 as of January 1st of last year. And click OK. Now you will notice that what happened with your trial balance is you have a balance on the uncategorized expense. Now, this doesn't just clear with a journal entry. So what happens is you've got to go through each of these vendors list. So to adjust each of the vendors account, you want it to go to list and adjust each of these four vendors account, and go to the chart of accounts, highlight your accounts payable, and at the bottom of the screen under activities, click use register. Note you will see the opening balance on the right next to the uncategorized expense. You can make this screen a little bigger by extending that so you can work on it. So what you need to do is change each of this item to opening balance. Instead of uncategorized expense, change it to opening balance equity. So scroll up and you will find your opening balance equity. And be sure when you click that to recognize it and complete the posting process, you want to record this. You have to do this for all four of the vendors. So do this for the next one and the third one. Just change the uncategorized expense to your opening balance equity account and save each one of them. So once you have completed all four of them, you will now close that screen and look at your trial balance. Your trial balance will now have a zero balance on the uncategorized expense, zero balance on the opening balance equity, and your ending balance on the total should match what your chapter check figure shows. So now we can move along to problem 6-3, 6-6 to set up your inventory items, cost and sales price. To go to the list and want to go to item list. Under item list, you're going to look for your new item and set up an inventory part. Click the inventory part. This is the part that is very important. And under item name, we will do the first one, pain medication. So just type in pain medication. And under your description on purchase transactions, you can type in purchases. So just type in the word purchases. Note that this word carries forward to the sales information, but we don't want that term to appear on the sales information. So what's going to happen is we're going to change that to sales of merchandise. Now this pain medication has a cost of $2, and the management decides to sell this at $10. The tax code, meaning that's a taxable item, and under the income account, because we're using perpetual inventory item, this is going to get to the inventory sales account. And this is dated as of January 1st of last year. So the date there should be as of January 1st of last year. So you repeat this process for every one of your inventory item. It's just time consuming but can be done. Once you have completed setting up your inventory items, then you're ready to record your transactions. Following 6-7, your purchases, you will note that under the real business world, the big corporations establish another level of internal control. That is creating a PO or purchase order to the vendors. And when the delivery arrives with the delivery receipt, a receive inventory entry is recorded. This additional level of control will track the exact inventory count of the items delivered. Because of the volume ordered in the purchase order, sometimes vendors could not deliver all the quantity in one shipment. Therefore, recording just the quantity received is important for both the warehouse count and the accounting side. So, to record that, we will assume everything is delivered based on our PO. So the first one, we will just record the December 1st transaction of a purchase of 1,000 units from Las Vegas Medical Supplies. The important thing here will be to write your purchase, which is purchase of pain medication. So under item, you look for your pain medication, and this is referenced by invoice number, or they call it reference number 1 to shorten this up. And the important thing here is to determine the terms. The terms will have to be entered in as terms. Note it's the $2, which is our unit price. The terms is 110 and 30. So click that, and if you enter your quantity of 1,000 at the unit price of $2 cost, you will see that you owe $2,000 to Las Vegas Medical, and that is in reference number 1. Save this in new and go to the next. So record all your December transactions. Once you have recorded all your December transactions, this is how your vendors would look like. Vendor balance detail. And your vendor balance detail will include not just the December transactions of 27,710, but it includes the balance of those from January 1st, previous balance from other vendors as well. Following this, you want to record the returns of your inventory. So you're allowing your vendors to return for whatever reason they would like to return the inventory. Note that when you follow the same trend, this is defaulting on bill, so you want credit. So there is December 2nd, the return of 150 units of pain medication by Las Vegas Medical Supplies, and that is referenced by 1, that is your reference invoice, minus credit. You will need to identify this when you pay in chapter 7. So $300 is the return for this vendor. Once you have established and recorded all the returns till the end of the month, you want to double check again your vendor balance detail and again your trial balance as of December 31 to determine whether you are in balance, so you can move to the next chapter.